Drive, and I'm your host, Anthony. We are still talking, of course, today we are a little bit relaxed because we have the regulator and we have the market players here today to answer all those questions that probably you've had on your mind for quite some time. I'm with Madame Babiri Dora, Business Development from ICA Lion Asset Managers, and of course, Mr. Martin Owini from the Capital Markets Authority. Mr. Martin, we have quite a number of statistics that show that the collective investment scheme has not only grown in terms of the value of the assets, but also the number of investors. Yeah. According to your quarterly bulletin in 2023, the first quarter, at the close of March 2023, the collective investment schemes had actually a total of 1.7 trillion worth of assets under management, and this represents a growth of 7.9% from at least 1.6 in December. When you look at the trend in all the quarters, the trend is growing. And this is not so. When you look at the equity market, it's a little bit sliding back, especially now when you look at the current market conditions, the equities we have listed, people are running towards the investment scheme. Is this a good thing, first of all? And then why? Why are people running towards the collective investment scheme?
Thank you very much, Anthony. Number one, the collective investment schemes have proved to be competitive. Not only competitive in terms of the Capital Markets Authority, but collective investment schemes are now outcompeting the traditional products in the banks. So if I had 100 million, or let's make it more realistic. If I had 5 million and Babiri had 1 million.
I think 100 million is also realistic.
Yeah, so let's say I had 100 million,
yes,
and Babiri had 1 million, and we walked into the bank.
Yeah.
And Babiri said, give me an interest for my 1 million, and I said, give me an interest for my 100 million. I would get the higher interest than Babiri. When I go to a collective investment scheme, whether I brought 100,000 or 100 million, we all get the same interest rate. So that's part of the popularity. Then also, Ugandans are becoming more sophisticated. What are they saying? We would like good interest rates. So you find that the collective investment schemes are currently paying between 11 and 13%. The government securities are paying between 10 and 16%. So they are positioned themselves in between, where somebody says, I would like to have a good interest rate, but I don't like this idea of being locked in for 3 months, 6 months, 12 months, 24 months. When I want my money, give it to me. And if I want it in whole or in part, let me take it. If I want to bring whatever I want, let me bring it. So that flexibility of collective investment schemes is working very well for Ugandans, especially people who say, I've been keeping my money in the mattress, some in the socks, others, I hide it somewhere in the house, Yet, at the end of the day, money loses value over time. So people are saying, collective investment schemes gives me the advantage of not only earning an interest on a daily basis, but putting in my money when I want and pulling it when I want, and still getting a good interest rate without having to be locked into a fixed deposit account or a government security.
Yeah. Wow, interesting. A very good answer there, because I think many viewers really have always had that, that thing for safety and liquidity. They want a safe investment, yet they can always get back their cash, right? Now, Madame Dora, when I look at ICA, your assets have also grown, just like the general trend, with last quarter having at least 764 billion from 762. So it shows that you're also growing as a fund manager. However, when I look at the investments, the fund managers generally have been investing a lot in the treasury bond market and the fixed incomes. When I look at the percentages, at least it indicates that government bonds took at least 76% of total assets under management, generally speaking, and fixed deposits at least 14.2%, treasury bills at least about 4.1%. I don't know if you can relate to that, but tell us a little bit more about how you diversify your product to see that, first of all, you take in less risk for your clients, but also to see that you have that return coming in heavy and thick.
Okay. Thank you so much, Anthony. So basically, one of the reasons why you'll see us say, come put your money here, is we always pride in our industry to say that you will enjoy what we call the professional investment, touch. So we don't wake up to gamble. We have people who have studied this. I could be the front face to be able to just smile at you and say, hey, we have, these good returns. Please come and put in a layman's language. But you see, beyond me, I have a whole other team. So we do have, I'll speak for ICA Lion Group. We have what we call the investment philosophy at play. Both internally, we have our investment philosophy, but we also have the investment process, that we follow. And then this is the investment process and philosophy that we have in-house is subscribed to what the market or industry practice should be. Okay, so this is beyond Uganda, beyond Kenya, and it's international practice. But we follow the East African, let me say the Kenyan practice. When you look at what exactly that should be like. So, and also the regulator, what does the regulator think? We submit what we call our deed of adherence to of these schemes. But also they read through, they stipulate where are we investing, how are we investing, is it a thought through process, and then why we give explanations of why our asset allocation is skewed toward the bonds, for instance, as it is. So we all know in the little commerce or economics that we did at some point, the higher the return, the longer the investment, and of course as also the higher the risk you're exposed to. So that's exactly what we follow right now, and maybe to answer why we seem to be more skewed towards bonds. It's the place of we are being tasked to give a competitive return, and keep your money above the inflationary rate, but as well as make you happy that you're able to bring in more, but also go out and do something else, because we are mindful that there are other alternative investments you can do that can give you higher yields than what the collective investment schemes can do. But I choose to advise and tell our viewers that look at collective investment schemes as a parking bay for your funds before the final resting place. What do you want to do? Ndimosuwuzi, downtown. Yeah. And I have my, let's say, 500 million. I'm going to go get a container, load it, and come to Uganda, make more money, all right? But where is this money? Because if I'm going to travel in 3 months' time, where is the money?
At that moment. Yes.
If it's locked up in a fixed, it's locked up in a fixed deposit in the commercial bank, you have to get a return. That's what Martin was saying. They'll ask you how long, how much, to be able to inform the return they give you, depending on the season. But with the collective investment schemes, it's not the case. You're in, it's flexible. One of the reasons why it's been fast growing, very flexible. It does not lock you in. So it should not be confused with what fixed deposits do or what actually the actual government securities do, because for them, once they're issued, you purchase and then you pay coupons. Right? But then you can't have access to the principal until maturity. While here, you're getting higher than any of the two, exempted from withholding tax, right? And yet you have access to your fund. Should it be hard that I usually hear my traders or people on ground say, in Hoima, now I have a friend who called me and said, in her place, I think it is so like that side, apparently there are minerals that have been discovered. So she was running to buy land around the same, So you find that with that kind of, and the expectations are that they can sell probably that land or put up, units that are more expensive, that will bring in more money for them, for the expatriates that will be in that kind of area. So it's a mindset, yeah. So it's here, you're free to say to, give me my money. In 24 hours, the money will be on your account. So those are some of the things that have made the collective investment scheme grow. But to go back and pick you up on exactly what you wanted me to answer in terms of why we are skewed to maybe long term, and what does it mean, or how do we even go about it to be informed that this is how we are going to do our asset allocation. So it depends on the season. We have the research team that will be able to look at the past trends and forecast. As economists, everything is built on assumption. We look at, you remember ceteris paribus?
Yes.
All factors held constant.
Yeah.
A, B, C, D. Then we factor in the variables and then say this is what we are looking at. And this is how the future is set out based on really both the micro and macro environments. So micro are these things that are within, let's say within ICA, the investment philosophy, the regulator is also a bit within the micro. But when we go to macro, then we start to widen, political factors play in, because we've heard of cases where regimes take over the other, and then there's a slashing in currency. I come and say, how much money do you have? 1 billion. I'm taking off 1 0. That's, we work backwards for everyone, whatever amount of money you had. But that's not something we've experienced in the current, times. Yeah. But those are some of the things we look at, and you're like, okay, how far is our next election? Usually, and I'll tell you this, why it's important to use a fund manager professionally. Before 2016, you'd find that would invest heavily in long term. All right. Reason being, because of there's the way the election period behaves, So there's a lot of money being sucked out of the economy. So the rates are really enticing. So we are investing, we are buying government securities, yeah. But then, and you'd find that yields would shoot up to 24, 18, But we were shocked. After 2016, that hasn't been the trend. So you can't sit and just cram and say, this is it. Yeah. It's political time. We're thinking, now you must have a whole team. We have what we call my investment people. We call them the chartered financial analysts. They do study this, and they look at the investment, environment and advise after research has submitted. Then the investment people say, okay, this is a good thing, let's go in. But we also have another committee which we refer to as the risk and compliance thing. Now, these are the big boys.
They measure the amount of risk.
Because regardless of how good the chartered analysts look at it, the research, everything is pointing us to, the bond, the 20-year, they are very, juicy. Please think in more, But we also have the investment philosophy that we already developed that says you can't go beyond this limit. You understand? Yeah. So you must really have an argument for you to, to push. Yeah. And you must also notify the regulator that you're changing some of these things. You understand? But also then the risk and compliance could say, this is very good, well done, team. The Bagandas these days, they only watch Talonyonga Bolowoza, but then we need you to look at this risk that you've not looked at. You understand? Yeah. What happens if, for instance, we go into political turmoil? What happens? So we need then to look at when is our next election. Then you start to inform these other factors that you don't have so much control, but yet you can actually make an informed decision to draw in the different asset allocation. I'm
going to come back to you on that matter. Especially this year, when I look at the budget allocation, there's quite little space for domestic borrowing. The domestic borrowing is going to come down from over 5 point something trillion to about 1 point something trillion. How is that going to impact, especially on your long-term investments? Mr. Winnie, let's talk about the equity markets. When you talk about the Uganda Securities Exchange, the performance in the recent years, yes, there have been very many achievements, especially the MTN IPO, like you said. It was an electronic IPO, very exciting. People could buy shares using their phone. It was very exciting, and probably one of the things that pushed the exchange during that time in 2021. But then in the recent past, we haven't seen any new listings. We're expecting Airtel, for example, to come on board as well. It did not. As the Capital Markets Authority, what would you say you're doing to push more for more equities to be listed, especially to attract these big conglomerates to come on board and bring competition on our equity market?
Thank you very much, Anthony. That's an excellent question. What I would say is that the equity markets are in a very interesting time, because at the end of the day, if you have fixed income, government securities, treasury bills, treasury bonds, collective investment schemes, giving you between 10 and 16%, then that becomes the easier place to take your money. Why? Because the interest rate is obvious. And many of you could have heard of a dead investment. What's a dead investment? Something that's giving you below what the government security is giving you. So when somebody says, but this is safe, as the Babiri has been saying, I am very unlikely to lose my money. And here I am, I have the opportunity of going into shares, and share prices go up and they go down. The likelihood is, if I had a bit extra money, I would put it into the government security, the collective investment scheme. You get the idea. The fixed income, because it's between 10 and 16% and it's safe. Here, I have to ride the storm with the share. But I must say that MTN has brought a unique opportunity into the equities market, into the shares market. And that unique opportunity is something that Ugandans must begin to explore. Now, for one, the USC, the Uganda Securities Exchange, remember we said that this is the exchange. You no longer call people to MTN Towers, Greenland Bank Towers. You must go to the Uganda Securities Exchange to buy and sell shares. So one, that aspect, I've just got back from Lira, and we were in Lira University yesterday, and somebody said that I bought my MTN shares on the phone. That is a game changer. You know, I can sit in my sitting room and actually buy shares. That's what we need to encourage Ugandans to do. Because we can't run away from the fact that there are 3 million plus investors in shares in Kenya and only 60,000 in Uganda. They actually doubled when the MTN shares came into play. So whether you have a 50,000 and 100,000, buy shares. Why? Because when you buy shares, you're not buying short term. In fact, the minimum period that professionals advise when you buy shares is 5 years. So that outlook also needs to come into play from the perspective of don't keep all your eggs in one
But
basket.
Mr. Winnie, when you look at the current economy, people are crying out to, they want quick returns, and they want money really that can produce money very fast.
Yes.
They want to invest in things that can produce money very fast. Equities seem to be off that track. They seem to require a very patient mind, a very patient, pocket. And, you must have that patience. If I don't have that patience, can I still invest in the equity markets?
Truth be told, and I like what Babiria said, when you invest, always have an objective. If your objective is quick money, please don't put your money in shares. Yeah. And professionally, it would be wrong for me to advise you to put them in shares. When you're investing in shares, you are investing, as I said, a minimum period of, not even maximum, of 5 years. So your outlook is saying that I trust MTN, I trust Stanbic Bank, I'm putting money here and I'll wait until that share price plays in my favor. So in my opinion, when I look at MTN, which was at 200 during the initial public offering of shares, and is currently at 170, 165, that plays in my favor. Because I trust MTN. Is it going anywhere? Every day we're transacting mobile money, we're buying airtime, MTN isn't going anywhere. So, and profitability is, recently they had an AGM, they were at 83%, distributing profit to shareholders. That's an opportunity. If the share price goes down, that's an opportunity to buy, because at the end of the day, you're more likely to have an opportunity to rise with that share price.
Yeah, like Warren Buffett says, when the streets are bloody, you always go out buy more.
Buy more.
Exactly.
I think that we need to cultivate that culture.
Yeah.
Whenever we see the red figures, the down arrows, we really want to run away from.
Exactly.
Thank you, Mr. Winnie.
Yeah.
I want to come back to you, Madam Barili.
Yes.
On investment in the long-term securities. When you look at the markets right now, yes, in the past year, there was a lot of domestic borrowing from government.
Yeah.
We are not going to have that in the coming year. How do you handle that as a fund manager? You really have over 76% of your investment in the long-term fixed incomes.
Yes. I know that this was released, and that drops. That's almost a 1% in the GDP. But you see, that's why we are saying that we are professional and we know these things. Like I mentioned, we monitor our macro and micro factors. So you see, government coming out and saying that they're going to reduce the domestic borrowing definitely affects the fact that we've been investing heavily towards the government security. But that's not shock to us. You understand? Because that's what we do on a daily, every day when we wake up. We expect factors to change.
Yes.
That's what I said. Other factors held constant.
We're waiting for the wind.
Like my investors bringing in money on a daily because they expect yields. Me being in existence as a fund manager, my regulator being available, the economy at large. Those are factors that are held constant.
Yeah.
But they're variables. You understand? What does the government want to do? That can fall under economic, legal, political. Now, those are all factors I cannot ignore as a professional fund manager. Every day I look through. We recently just came out of one of which was behaving like legal, political. You remember that accent?
Yes.
I'm sure you're in media. You saw this.
Absolutely.
Because collective investment schemes came up. Everyone has been like, and the thing is that I could hear all my clients basically say, we'd rather take our money and put it under the pillows.
Yes.
I was very inquisitive to know where this goes because they were very, very sentiment about, not going through another kind of taxation. Yeah. But that's something that hits the entire industry. Yeah. But sometimes that's why we have what we call stakeholder management. So as a fund manager, we don't only say our role is to invest. No. For instance, you realize that hit the entire industry and it brought all the fund managers together as an association to say, no, look here, the reason why we're in existence is ABCD. If this salary is being taxed somewhere, we pay corporate tax, and we've seen that one of the good things that are coming out of this is that people have embraced the saving culture, which is one of World Bank's goals across all developing countries. And it has shot now, you see, headlines are like, collective investment schemes hits 1.7 trillion, right? It's a good thing for the people. Even you're sitting here and saying, why has it become so popular? Yeah. And then now you want to tax it and suffocate it. So they're what we call sometimes, you see, our elders, the economists that inform these decisions, I don't know the political tier, but the people that maybe advise economically, the parliament or the committees, sometimes may not have seen things from an angle of somebody on ground. So that's why you see we come together and through the regulator, you're able to have these dialogues and then meet each other halfway. You understand? There's some of these things that benefit the citizens and they just cannot, change.
Yeah.
So even when we get a release and say, domestic borrowing to go down, yes, the government has reasons why they are doing that. You understand? Maybe because they're not able to meet their budget using the domestic funding. And so they've got to increase skew towards, international borrowing. Okay. Then what does that mean to us as fund managers? It's positioning. That is why we work with offshore other fund managers. We have other products that spill over to offshore.
Okay, so you're going to go to Kenya.
Just for example, yes. Because then that means, and I'm sure also the government has interest in not suffocating and killing this. Because either way, whether you internationally borrow, you'll always have the internal monetary policy behaving.
There's something that actually a theory that says that when we have a lot of domestic borrowing, we actually kind of crowd out the private sector.
Yeah.
That the interest rates are going to go high. And private sector suffers.
Yes.
Don't you think that's why government is running away from domestic
Domestic borrowing.
to protect our private sector?
Well, it could be. It could be. Let's say on a scale of 1 to 5, it could be a 2.5.
Okay, interesting.
Maybe a 2.5.
Interesting, yes.
It could be a 2.5 because
Yes.
and this I wear off the heart of my brand and maybe the industry, I disclaim, but maybe to look at it from a purely an economics perspective. Underneath, don't just take the headline.
Okay, so
Underneath,
yes.
there will be other motives that we have not looked at, you understand? So sometimes some of these things are historical things, contracts that are still choking us, and we need to find a way of surviving, and we must increase that through that kind of avenue.
Yes, thank you, Madam there for that wonderful answer. We are our time is fast spent, but Mr. Winnie, before we go away from here, I would like to know your say about the integration of the capital markets in East Africa. We have, like you said, in Kenya, over, I don't know how many millions? 3 millions. And here we have 60,000. That is absurd. And when you look at the Kenyan market, the vibrancy is quite high. The listings are more. Yes, they have been there for longer and all that. But what do you think about the integration of our capital market as East Africans, the Tanzanian market, the Ugandan market, and so that we can have cross-border interactions in as far as trade is concerned? Is the Capital Markets Authority actually looking into that direction?
Yes. When you look at the integration of the East African markets in terms of the stock exchanges, whether we like it or not, it has to happen because we're in the East African community. And now you have a situation where, in my opinion, we cannot put too much onto the regulator. We also have to allow the industry to grow. And when you look at that, what am I trying to say? The private players are also key stakeholders in the growth. And in my opinion, everybody needs to take their hat off to MTN, because what has MTN done? They have linked with the Uganda Securities Exchange. And in the comfort of your sitting room, you can pick up your phone, dial a code, and actually transact, buy shares. Now, in my opinion, that's why we must compliment Smart TV for allowing us to come here today. This is the kind of message that needs to go to the average Ugandan, the average youth in Uganda, to know that next time you get 100,000, you can actually buy a share, you can buy a collective investment scheme. Now, if we can get to that point, that will be the key driver that will take us into the integration, because we have a young population that listens to radio, social media, and all these avenues. Now, how do we get that population to pick up their phone in the evening when they're bored and transact that 100,000? That's crucial for us.
And Mr. Winnie, sorry for interjecting, but when you look at our markets, you still have so many international investors or foreign investors in our markets. Even just talking about the Kenyan market, you might find, actually it is true that 3 million, almost half of it or more, is foreign.
I wouldn't say that for Kenya. Yeah, I'm the kind of person who says, don't keep looking at the grass which is greener on the other side. Look at your own grass. Okay. And in Uganda, what I would say is, number one, let's pick up our phones as the youth. Number two, how would I put it? The key movers of investments in the securities markets, in the whichever way, whether financial instruments, is the retirement benefits industry. We need to grow our retirement benefits industry, and it can only grow when the average Ugandan employee goes to their employer and says, we contribute to the NSSF. Do we have an alternative for us as an organization? If we can build those organizational retirement schemes, it will be a plus for us as we join this. Yes. But we must also complement the NSSF. Okay. Believe it or not, NSSF is East Africa's biggest retirement benefit scheme. Now, that is our only comfort in the 60,000 vis-a-vis 3 million, because this big muscle can still punch for us, and that's what we need. But it's a multiplicity of factors that need to come into play.
Wow, thank you, Mr. Winnie. for your time. Madam Babi, your parting shots as we, of course, say bye to our viewers.
All right. Thank you, Anthony.
And please give your toll-free number.
Oh, thank you so much, Anthony. And thank you so much, Smart TV. We are grateful not only as ICA Lion Group, neither the regulator, but at large as citizens of Uganda, because these are some of the things that people search for and want to know, but they literally don't know where to find this information. So basically, for more interaction in terms of how you can be able to invest, it's as low as 100,000, and we can, top up is 50,000. We even want to launch mobile apps that will be able to facilitate that you can be able to, so that we can even lower it to 30. And the objective is that we can see if then that works, how can we then put it to 10,000, close to $1 really, so that everybody can then try to participate and save. So ICA Lion Group is located at Rwenzori Courts. Yes, Rwenzori Courts is the building right around the Sheraton roundabout. We are not about to run away. You see the premises, the house, we are guarded. Smart TV is here. They will be recording if you're running. And our toll-free number is 0800-100-120. Yes, thank you so much.
You're welcome.
Thank
That's it. Thank you so much, Mr. Winnie.
Thank you, Anthony. Thank you so much. It's been a big pleasure to be here, and thank you for helping to grow Uganda's capital markets.
You're welcome. Thank you. There you have it, ladies and gentlemen. That's it from us today. I was, of course, with Mr. Winnie Martin from the Capital Markets Authority and Madame Dora Babire, who is the Business Development Manager at ICA Lion Asset Managers. If you missed anything, you can go back to our YouTube channel. That's at Smart24 TV, Financial Markets, and you can be able to recap and have some of these nuggets that we have shared here with you. And of course, till next time, have a very wonderful day. Bye for now.